All right, we're back for another episode of the REMO Show. Today, we're jumping into first-time home buying in 2024. So focusing on your first-time home buyers here. But there's a lot of good stuff that makes a lot of sense for just any buyers in general. So this is going to be a good one. I am Dean Lutton, one of the partners here on the show. We'll just kind of maybe do some intros as we kind of get the mic here and toss it around. It's sitting here with Tyler and Derek today. So Tyler, why don't you start it off? Where do you start?
Where do you start with buying a home? The first thing I would say is get excited, right? Like buying, we all live in the Lower Mainland. Buying real estate can be, almost emotional at times, right? All you hear is negative information, negative media reports and how hard it is to buy. I would say if you're ready to pull the trigger, you're ready, want to start shopping, get excited about it. It doesn't have to be this like awful negative process. It is exciting. It's like going to end up being your biggest, financial asset in your life. It's made a lot of people in this part of the world a lot of money, and it should do the same for you. So, where do you start? I think you got to start with a pre-approval, right? Before you even speak to a realtor. I mean, it's good to know a realtor, especially if you have one in mind and someone comes recommended. That's great. But again, this isn't the cheapest place in the world to try and buy real estate. So better to see what you can actually qualify for before you start hopping on realtor.ca or rew.ca and start looking at all these homes that you probably can't afford or maybe can't afford, right? So the first place you want to start with is a pre-approval. And to chat, of course, I'm going to be a bit biased here, chat to a mortgage broker, a true mortgage professional versus chatting to your own bank. I mean, your bank, that's an okay place to start. Obviously, there's great people that work at the bank too. I won't get into the differences too much between banker and broker, but the thing to always remember is a bank works for the bank. The broker is someone you hired to look out for your best interests, right? So you also want to kind of understand, just a few of the basics of what a pre-approval is. It's three main pieces. The first one's going to be a completed mortgage application, which gives us all your basic information, your full name, where you live, where you work, a list of your assets. The second piece is going to be a credit check. And no, us checking your credit isn't going to severely damage your credit. It's important to keep in mind. That's a conversation we have weekly. Me checking your credit is not going to be the reason you don't qualify for a mortgage. I can tell you that much for a fact, right? And then the other piece of your application is going to be document collection. So where do you want to start? You got to start gathering documents as soon as you can, right? Because so many people ask us, well, how long does it take to get pre-approved? Really, it's mostly down to you and how quickly you can act, right? Because we can get your application, we can get your credit report, but if we don't have the supporting documents, which is really your income documents more than anything else, depending on what you do for a living, we really can't get started, right? And so one thing I would be wary of, if you're thinking about getting started, and where do you get a pre-approval from? You hear it on the radio, you hear it on TV, you'll see Instagram ads, you get pre-approved in 60 seconds, right? From, ABC Bank. Those things are trash, to be honest, right? Like you have no idea if you're supplying the right information. Am I putting my gross income, my net income? Am I just going to round up? Does that even matter? Like those are very quick snapshots that give you a rough figure of what you may be able to qualify for, but they could be completely wrong. So for you to go through that 60-second process to go make a $100,000 decision or $500,000 decision or $1 million decision, it could be a waste of your time, your realtor's time, because it could just be completely false, right? So where to start? Reach out to a mortgage professional.
Yeah, I mean, and you started off with something important, like getting excited, and hopefully the whole process is seamless for you. But like going with that 60-second pre-approval can rip that all away from you pretty damn quick. Like imagine you've spent months looking for properties, you think you're pre-approved, you find this home that you're in love with, and then you realize you don't qualify. Like absolute nightmare for everyone involved. Only other thing I would add to Tyler's comments is like in regards to timing, as early as possible. Even if you're planning and buying maybe in a year from now, you should start having a discussion, go through that full application and document process now. Because a lot of times, especially like we live in the Lower Mainland, it's very expensive. A lot of times people think they're going to buy a $750,000 townhouse and they qualify for $500,000, right? So if you figure that out now, it gives you a ton of time to try to fix your situation, or maybe talk to your family about getting a 20% down payment instead of 10. Or if you're self-employed, you can maybe file higher income this year. Or if you got to pay off a car loan, like you can just build a roadmap to get you to where you want to be, ideally over the course of time. But if you're calling a broker like the day that you want to go write an offer, and you don't qualify, again, just a pretty nasty situation, right? It's not going to feel very good. And it'll probably impact, the way that things progress for you.
It's never too early to start. At the end of the day, like, financing is always a plan. Like, it always has to fit a plan. And a financial plan is so important, not just a plan to, have a goal to buy a home or whatever the case is, but have a proper financial plan and understand where things are at. And the reason why it's never too early to start is even if you did, you don't plan on buying for 3 years, 2, 3, 4 years, whatever the case is, understanding everything that's going on, how to properly get there. You could be self-employed, you could be commission-based, you could be employed and have maybe some credit issues that you're unaware of. There could be something on your credit report that hasn't come up when maybe you bought your truck or your car, because car financing companies can pretty much finance anyone regardless of the credit issues. Where that's not the case on the mortgage side. Like, getting a mortgage can be very difficult from a credit perspective, and having somebody properly analyze that credit report is very important. And if there is an issue, it may take a year, 2 years to fix that issue. So again, back to it never being too early to start is, even though you're not planning on buying for 3 years, well, we could fix that issue over the course of that 3 years and ensure that you're ready to go when you are ready to go. Asking for a referral, knowing anything about the process, right? Like, just how do you properly do that? And I'll start off like ask somebody that has purchased, maybe ask somebody that's purchased multiple times even. That would be where I would start personally. I know another one we're going to talk about is just searching Google reviews. So, you may get a couple names. Actually, ask for a couple names. Don't just go with the first and only one. Look at Google reviews. Believe it or not, you may search up a bank or an institution and there's no Google reviews. Like, there's literally none. Well, the reason being is businesses can actually decide to turn off reviews. So customers don't have the ability to leave a review. It's not recommended as a business owner to do that because you want to be able to showcase and show off your good reviews. So why would a business turn off the ability to leave a review? It's probably because they're all negative. Like, everyone's giving them negative reviews. And that's typically what you would find with an institution. It's all negative reviews. And so there is no reviews there. And so looking at a mortgage broker, if you're going with a mortgage broker, look at their reviews. If there's no reviews, run away. If there's bad ones, maybe look at, okay, well, why are they bad? Did the business respond and give a proper answer? Maybe the individual was hard to work with, or maybe they were misled on something, and the business had a proper response. Just really dive into the reviews. Don't just like, oh, great, this one's got 5 stars, I'm going to go with that. Dive into the reviews. Look at the feedback. Look at the way they communicate with their customers. If there's no response to the reviews, something to think about. So I'll leave it there. Maybe Tyler, you can jump into some other other ways of making sure you're finding the right team.
Sure. I mean, obviously you want to dive. Life's on the internet, right? So check out the reviews, like Dean said. You can look for them in Instagram, see if you enjoy their content, see if they're giving you good information. You can check out their website. Was it built in 1992? Are they even still in the business? I also would say
wait. Was there websites in 1992?
I mean, I think there was. Okay, 1999, 2000, and then also, like, if you do get a referral and maybe that broker looks like they're really active, or like, the point I'm trying to make is, don't assume they're too busy for your call, right? Especially a mortgage broker. Like, we're here to hopefully get hired by you, right? So that's the important piece to remember. Like, you're interviewing them. Like, we want to work with you. We want to help you out. So if you do get a referral, call them, right? Don't just check them out. Obviously check them out online, but don't make your full decision based on that. Give them a call, see if you have a good feeling about them. Trust your gut. And if you've got close people in your orbit that you trust, that have worked with this person, I mean, that's probably a pretty good indicator that they're good at what they do.
Yeah, I mean, if you're a first-time home buyer, you probably have some friends that have purchased or are actively purchasing, or they're pre-approved or what have you. So talk to people who are active in this, maybe not like your parents that bought 20 years ago, and just mixing all of that, right? Like, get a referral, then look them up on Google and on social media, then interview them. Like, that first call with the broker it's kind of the broker's interviewing you, and they're and you're interviewing them, right? To make sure it's going to be a good fit. And this kind of moves into our next piece here, but I'll leave this off with. Once you meet a realtor or a mortgage broker, ask them for a referral to the other one, right? Like, a good realtor is definitely going to have a good mortgage broker not on their team, but one that they work with, right? Because if a realtor is sending all their business to a broker and that broker's not doing a good job, there's no chance that realtor is going to keep referring to them, and vice versa. A good mortgage broker is going to have a Rolodex of awesome realtors because they've worked with them on deals in the past. So that's a good place to start. And, through the whole process, you're going to work with a broker, a realtor, a lawyer, a notary, and sometimes an appraiser, and typically an inspector. And, the initial kind of introduction should be to a mortgage broker or realtor. And from there, the rest of them can be introduced.
It's a good point. Having a team of individuals, professionals that work together, have familiar working with each other, can communicate well with each other. That's very important. So to Derek's point, the mortgage broker, realtor, referral back and forth, those are great places to start. And honestly, something I would actually seek out, because there is a lot going on in a real estate transaction. There's a lot of moving parts, and ensuring that all the professionals are working together seamlessly is key to having a seamless process. So let's move on. What is important when working or deciding on a broker? Like, what is really important? I mean, we touched on a few things already here, just based on how to find the right team. But a couple things that are important: experience. Everyone gets so caught up on experience, and I couldn't agree more. Experience is key, but it's not necessarily years. I know many mortgage brokers that have been doing this, been in the business for 20 plus years, but they manage maybe 5 transactions a year. Maybe they're part-time, but they don't, maybe they do things, maybe they have another job, or they just simply only want to work. And there's nothing wrong with that. But years, the reason I make that point is years isn't always how to evaluate somebody's experience. Ask them how many deals they've funded. Ask, like, if you're really going to get into the nitty gritty. As an example, our shop in the peak of our careers, we funded over 1,000 funded deals in 1 year, and that is more experience than many mortgage brokers do their entire career. And so that is very important, understanding the deals, because the more files you do, the more experience you have in all dynamics of financing, and every file can be very, very different from one another. So that's something I would touch on, is just really looking at the experience and asking those questions of not just necessarily how many years have you been doing this, but how many deals have you funded?
Yeah, and I'd say the big reason why that's important, right, is, a broker who's been doing it for 20 years, like, in terms of qualifying criteria, you can forget what qualifying criteria was, from even 5 years ago in the past, right? Everything's changed so much. Really, the most like reasonable experience to have for any broker, whether you've been in it for 5, 10, 15, 20 years, is probably within the last 5 years, because there's been so many regulation changes. There'll continue to be so many regulation changes. Like, change is inevitable, especially in the mortgage industry. So making sure you're dealing with somebody who's always active, always busy, always working on files to really, hone in on what's achievable in today's market is really important. And, I think of someone like my father, who's been a mortgage broker for 30 years, he hangs off my door in my office asking me about, how do I get this deal done? Which you wouldn't think that, like, for other industries, like if someone's been in there for 30 years, you think they're like the absolute Bible, the encyclopedia on how to do things. But because we've seen so much change, dealing with somebody who's like, sharp and really dialed into the market today is super important.
Just to touch on that, because like it is important, like in our business as mortgage brokers in the finance space, there has been so much change. So like you couldn't be more correct there. Is that the same question or same concern you would have with a realtor? Maybe not. Like, years experience as a realtor is actually very valuable. So I just want to put that caveat there. Like, we're specifically talking about a mortgage broker here, and the change in our industry it's crazy. It's almost year by year, if not month by month, the changes that are happening. So very important piece to determine there.
Yeah, I guess just to rattle off a few other key considerations when you're trying to decide on a broker. What I would expect as a first-time home buyer that knows nothing, like that introductory call, they should be explaining the process in detail. Like, that call doesn't need to be more than 20 minutes, but if you leave that phone call and you have no idea what's next or what's to come or how it's all going to work, I would walk away, because that's just like, there's probably going to be poor communication in that process. And I think understanding what you're up against is very, very important, or you're going to be surprised, and it can be pretty daunting. Transparency and honesty, this is something you're not really going to know until you move forward, right? But like, as an example, brokers get paid more on the longer term. So, if someone's taking a 5-year fixed or a 10-year fixed or what have you, like a good broker, especially over the course of the last year, I mean, things are changing now with rates coming down, but A lot of people have been doing 1, 2, 3 year terms, which the broker's actually being paid less, but it's in the best interest of the client, right? So looking at little things like that, detailed explanation on lenders and products, and making sure like you're working with a broker to understand options. If they're only presenting you with one option, fine, but understand why, right? Are all the other options more expensive? Great, then you probably don't need to know about them. But if there's two that are the same, like what's the difference between the two? Prepayment, penalties, all these different, right? Because again, like you probably know nothing as a first-time buyer. Understanding, making sure that they're doing a true pre-approval, which Tyler touched on, which is like a full application, all the documents, pulling credit, looking at your down payment. Like it's strenuous and it can be a little bit over the top, but that's the only way that you're going to get a proper pre-approval, which takes a lot of the risk out of anything going wrong with your financing once you actually find a property. And I guess just last piece, like communication is so important in everything in life, but making sure that they're on the ball, they're responding relatively quickly, they're giving you the information that you need. And lastly is lender access, right? And this is a little bit more high level, and you wouldn't really know, to be honest. Like it's going to be tough to dissect this, but as an example, like HSBC is a lender that is only accessible to certain brokers, and it's not a large pool of brokers either. Dealing with a broker that maybe doesn't have access to that lender is going to impact your bottom line at the end of the day, because that's an option that the broker can't present, right? So just a general question to ask about their lender access, and and that all stems from a brokerage, like the brokerage that they're a part of, such as like a Remax for realtors, a DLC, a mortgage architects for brokers. The bigger, the stronger the brokerage, the more lenders you have access to, which inevitably is going to help the consumer.
Yeah, that's a great point. Lender access is huge, but it's a very hard one to try to monitor as a first-time home buyer. But just asking the question, really all you could really evaluate is, again, to not know like the detail of like, access to an HSBC or, other credit. There's a lot of credit unions out there that brokers don't have access to. There's a number of lenders that brokers will not have access to, that is going to be very difficult for a first-time home buyer to try and navigate. So what I would take away from that is, how do they answer? Do they answer it with confidence? Do they answer in a way that makes you feel comfortable with that response? Because that's really what it is. Because a lot of people will fumble the bag, so to speak, when they get that question, because they're naturally going to just be lying to you, or they're flat out going to tell you, yeah, I don't have these lenders. And even if they don't have those lenders, it might still be okay. But how did they answer it? How are they going to mitigate the reasons why they don't have that? So not really too much more to add to that piece.
I'm just going to quickly jump in and maybe think of something like, if you get a referral with the broker's name, like this might be, Google that person, right? Google that name. We get updated, monthly from, brokers getting busted with fraud, doing, basically the wrong things. And these suspensions are like, maybe 30 days, maybe 60 days, maybe 90 days, but those articles live there forever, right? So
right.
The other note to that too is, trust me, the bank's Googling you too. So maybe if you got some risky stuff on Facebook, old bad photos, all that kind of stuff. Like, I used to work at a bank. I used to be an underwriter at the bank. That was in our training. And
that's a really good point.
Yeah.
That's a really good point. And, that's another thing is, lender, again, not to hit home on the lender access, but it's a great point. It was Googling them. If there was a fraud concern in the past, if that broker had any issues, like they may have been cut off by certain lenders. Like they may have had access, but they might not have access to major lenders that every single mortgage broker has access to. They may not have access to them anymore because of an error that they made in the past. So that's a really good point. Back to Google. Google is a very powerful resource, believe it or not. Let's just touch on like, when is the right time to pull the trigger?
I would say when you're ready, right? Timing the market's impossible. If we just look at the market today, which I know isn't the purpose of this podcast, like it's slower. Rates are trending downward. But what does it mean when it's a little bit slower? It means you can actually shop. You can make an offer. You can maybe write under ask, right? You can build in subjects to your offer. You can really, like, the power is really kind of more in the buyer's hands right now. So if you're ready, you get a pre-approval, you look at the payments, you're comfortable with it. Are you renting? Are you just burning your cash, paying somebody else's mortgage off, and you're ready to start, putting some savings into the home that you want to live in? That's when I would say you're ready, right? If you're thinking like, no, I'm gonna sit it out and wait, an extra, year. I think there's more blood in the water to come. That's fine. Like, you can play that game. Might as well get pre-approved so you can see how much you can qualify for, anyways, and then you can just watch the market and then maybe jump in when you think it's right for you. When is the right time? look at the numbers. Is that a comfortable mortgage payment that you can make? Is this going to change your lifestyle? If you want to buy and you're ready to, but the prices look like what things do you have to adjust in your lifestyle to make this thing work? But I think if you're listening to this podcast, you're ready to get pre-approved. I think it's always a good time to buy when you feel you can afford it.
I agree. I've always kind of had three pillars of like, when's the right time? Number one's affordability, which you touched on. Like, even if rates suck, can you make sense of the payment? Because rates will probably get better. Is it the right property for you? Like, if you're buying something to live in for a year with plans of like selling it and upsizing, well, a year might not be enough time for the market to change and actually see that appreciation to make sense of it. Like, I would say typically for a starter home, like, you probably want to plan for something that's going to work out for you for at least 3 years. Like, that's enough time, in my opinion, for a market to change pretty drastically, especially like we're talking, Fraser Valley, Greater Vancouver type areas. And then just last piece is marketability for resale, right? Like, if it is a starter home, you want to, like, you're going to be selling it in the near future. So you want to make sure that it's something that's appealing to maybe other first time buyers or different markets. So, if it's an extra 50,000 for a 2-bed instead of a 1, and you can stretch it and make it work, I'd probably go for that, because that 2-bed's going to be more marketable than a 1, right? If it's a tiny little house on a tiny little lot, a 1-bedroom detached home, but it's a good price and it's cool because it's detached, again, probably not going to be appealing for a lot of other people, and you might struggle to sell it, or you just won't see the appreciation that the general market would.
Great point. So let's dive right into some tips for first time buyers. This is going to be good. So I'll start off. Create a budget to keep your down payment and savings on track. Ideally, you want to save 20% down. That would be ideal, perfect situation. And a lot of people, believe it or not, the bank of mom and dad is probably one of the biggest banks that we see in our careers. And what I mean by that is the amount of gifted down payments we're getting from early inheritances from grandparents or parents in general. It's significant. So if you can get up to the 20% mark, we recommend it, because you're getting higher amortization, meaning your payments are going to be drawn over the course of 30 years opposed to 25 years. And you're going to be saving CMHC premiums that are built into the loan. So again, creating a budget though to get there, regardless of what it is, whether it's 5% or 20% or whatever the number is, getting in the market is key, number one. And how to get there, create a budget, and make sure you have a diligent savings plan to get there. Work backwards, figure out the number, work backwards.
Yeah, maybe that's a conversation with family and parents and grandparents, whomever, up front. If there has been we'll help you out. Like, you probably want to see if you can zero it. Awkward conversation, possibly for you, but you probably want to zero in what that number looks like. The other side of it, and items that really affect your application. If you're thinking about buying, worst thing you could go do is go buy a brand new vehicle and get like $1,000 a month car payment or a $500 a month car payment, whatever that number is. If you're thinking, oh, I want to buy, but I probably need a new car in the near future, you probably want to buy that house first, right? Or buy that property first, because any debt that you carry, like what you qualify for on a mortgage application, your income determines that, right? And then any debts that you carry, that pulls down what you qualify for. So if you're going to buy a car anyways, and you need to borrow to your absolute ceiling, which a lot of first-time home buyers do in this part of the world, hold off on buying that new vehicle. The other piece I would say is don't change anything with your employment situation. Obviously, real estate isn't everything in life. You want to enjoy where you work, or you want to take advantage of a great opportunity. But if you feel like something like that's coming down the pipe, again, this is why getting a pre-approval is so important. If we qualify you and say you're good up to a purchase of $500,000, and then we don't hear from you for a couple months, and then you go out and you make an offer, and then you come back and say, you give us a different job letter, and it's like, oh yeah, no, I got a new job. Well, your application could be toast, right? Or if you decide at some point, like, I'm actually going to finally start that my business that I always wanted, you quit your job, that's going to change your entire borrowing possibilities, right? So if you are very keen and you're thinking about buying, in the next, year, I would say, 6 months to a year, keep your employment the same. Obviously, take that promotion if you get it, and keep your spending habits down, and don't go take on any big loans.
Yeah, I mean, it all kind of weighs out to keep your costs as low as possible, income as high as possible, save as much as possible just to get into that property, and you can adjust things later if you need to. But, we see a lot of people who, They might be a server, they're self-employed, they're commissioned, and obviously when tax time comes, no one wants to claim that because you don't want to pay tax on it. But those are all things that are going to impact you. So, if you're planning to buy in the next 1-2 years, whatever, claim as much as you can, bite the bullet, pay the tax. Or at least start by talking to the broker and figure out if it's necessary to do that, right? Or just leave your income the same. And I guess last piece on this, just a tip, is once you get pre-approved, or at least you have a gauge on what type of property you want to buy, it's super important, obviously, to be in touch with a strong team and a really good realtor, but like watch the market on your own too, right? Like you might see a property that pops up that's just perfect, and for some reason it didn't fall into your filter with your realtor, and you want to see if things are selling pretty quick too. It's going to give you a gauge that the market's picking up, and you might want to get out there and put a little bit more focus and attention on scooping something up.
Yeah, great points. I mean, again, just a reminder again to work with a strong team like Derek mentioned. One piece I'll touch on is just the tools that are available to you depending on who you're working with. But I know with our shop and having access to a qualification calculator that's built to your actual qualification. So again, back to the true pre-approval, there's actually software tools that accompany that true pre-approval that you can look and play around with. You can add property taxes, strata fees. You can add all those things in and get a total budget, a clear total budget. Those are tools that you're going to want to have access to, and working with a strong team that has those access to those tools is key. So moving on, first-time homebuyer advantages. I'll touch on this first. The first piece here we have is the property transfer tax exemption. So first and foremost, there is property transfer tax. It's not GST, not PST, nothing like that. That GST is important to understand as well, because that can come along with a property purchase. If the property is brand new, there is a GST tax, but this is a separate tax that's only tied to property in real estate in BC, and it's called property transfer tax. You pay property transfer tax on any purchase of any real estate. You are exempt of that tax as a first-time home buyer, so you don't have to pay that tax as a first-time home buyer if the property is under $500,000, and there's a partial tax rebate or deduction, I guess, on that number if the property is between $500,000 and $525,000. Now, for many people that are in Vancouver area, surrounding areas, you're probably thinking like, well, there is no property under 500,000. So yes, it is a very outdated number. That it's been that number since I got into this industry almost 15 years ago. So hopefully they change that in the near future and they increase that threshold. But as of right now, it's 500,000. It does work for a lot of other areas in the province. It just doesn't really work well here. But good to know there is an exemption there depending on where you're buying.
Yeah, the other piece, if you own any RRSPs, good news, there's a program for you called the Homebuyers Plan. You can cash in up to $35,000 of your RRSPs that you have to be applied to the purchase of your home. And that's full cash value out, right? If you have $28,000 in there, you go apply to have them cashed out to buy your first home, you get all $28,000 out. The important thing to remember is there's a requirement you pay that back over a 15-year period. So you do have to replenish the RRSP. Also, if you're thinking about buying this year, the best thing you can do is go set up a first home savings account, FHSA account. Look back in our podcast episodes. We did a deep dive on this product, I think about a month ago, 3 weeks ago. It's a great product that the government has come out with. It functions exactly like the RRSP Home Buyers Plan, except you don't need to repay the account. So you use it specifically to purchase, and then once you purchase, the account's toast, right? So it's kind of like a combination between an RRSP and a tax-free savings account. It's a savings account, but you can invest the money in the market, and you also get tax credits that help you pay less tax come tax season. So if you are thinking about buying, first home savings account is a great place to start.
Yeah, those are all no-brainer programs if you can make them work and make sense of it. And then the last one is there is a first-time homebuyer incentive program where you can borrow 5 to 10% of the property value that goes towards down payment. We haven't seen a ton of utilization in this program. Most people that have the down payment, they can make sense of the mortgage payment. They've opted just to do it on their own. This program essentially is a loan from the government. It's interest and payment free. The goal is to help you lower your mortgage amount, to lower your monthly mortgage payment. It's essentially for cash flow purposes. The downside is that if you bought a property for 500,000 and you borrowed 10% from the government and the property appreciated drastically. And whenever you're selling or paying that loan out, they're going to take the appreciated portion as well. That's how the government gets their money back on this. So again, we haven't seen a ton of utilization on this program. It's definitely worked for some people. Some people with 5% down, it's getting them to 10%, which drops the CMHC or insurance premium costs. There's a bit of savings there. Again, to each their own. We haven't seen a ton of it, but that program is available.
All right, so we'll conclude there. I mean, we touched on some great points here. Where do you start? How to find the right team? What's important when working with the right team? When is the right time to pull the trigger? Some of the tips for first-time homebuyers were really helpful. These first-time homebuyer advantages, which we just touched on, are, again, something you definitely want to dive into. Want to work with somebody that knows these programs. Understanding if you qualify for these programs or if just how to qualify in general, reach out to us for sure. Definitely reach out to us. And if you know anyone that is, looking to buy their first home, definitely share this episode. There's a lot of very helpful resources here, and we're always here to help. And again, lastly, just a quick call to action. It really means the world to us if you subscribe and like these episodes, to subscribe to the podcast, share your feedback, what you want to hear us talk about. If you have any questions, certainly reach out, and we'll embed them throughout these episodes, and we'll continue building this content for you. So thank you, and have a great day.